Good morning traders, and welcome to this Orbex Market Insights update for the FX majors on Friday, August 16th, where we will be focusing on the sterling dollar and the euro dollar. So it's been an interesting week then for sterling, as we've had a raft of data out, the majority of which has surprised to the upside. However, price action in GBP has remained stubbornly muted. So on Tuesday, we had labour market data which saw average weekly earnings ex-bonus ticking up to post-cycle highs of 3.9% against an expected 3.8%, though this was tempered by the unemployment rate also moving back up to 3.9% from the prior month's 3.8% reading. This data was followed on Wednesday by a set of solid inflation numbers, with headline UK CPI for July printing 2.1% versus 1.9% expected, and core CPI printing 1.9% versus 1.8% expected. Finally, yesterday we saw retail sales printing strongly over July also at 2.9% versus 2.3% prior. However, despite the mostly positive data over the week, the ongoing cloud of Brexit on the horizon has meant that any upside in GBP has been heavily capped. With the euro then, the main story over the week has been the softness in German data. Following a set of weak German ZEW survey readings on Tuesday, German Q2 GDP released on Wednesday showed a contraction. This has increased fears that the second largest economy in the eurozone is on the brink of falling into a recession for the first time since the global financial crisis in 2008. These data sets have compounded expectations of ECB easing, which the market is now projecting to be announced in September, and as such is keeping the euro skewed to the downside. Okay, so let's take a look at some technicals now, and please remember, opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So, starting with sterling dollar on the daily then, and you can see that despite the positive data this week, price action remains glued to the bottom of this bearish channel, which has framed price since the Q1 highs there in March. So, the recent breakdown below that 123.82 level took price all the way down to just shy of testing the 2017 lows at 120. We've currently bounced slightly and we're holding back above that channel low. However, the outlook remains very bearish for cable, and below that 120 level, the next big structural support isn't all the way down until the post-2016 Brexit referendum lows at 114.15, so quite a way away indeed. Now, if we drop down onto the H4 chart then, and you can see that downside momentum has waned over recent sessions. You can see price action has become a lot more choppy and laboured, and we are seeing a squeeze to the upside here. However, the outlook does remain bearish in the near term, and unless price action can get back above this 123.82 level fairly quickly, then the near-term bias remains for further losses, with a focus on a break of the 120 level next. Moving across to the euro dollar, again starting on the daily. And you can see, although we are still trading within this bearish channel, which has framed price action over the year, we have been essentially trading in a sideways range over recent months, with price at the current level around where it was at the beginning of April. However, we are sitting precariously on the 111.12 support, and should that level break, this will put focus on a further test of the current 2019 lows around the 110.25 level. Below that level then, the next zone to watch will be a test of the bearish channel low, along with the next big structural support at 109.14. Alternatively, if we drop down onto the H4 charts, you can see where price action tested that 112.17 resistance several times last week, but was unable to close above it. Now, if we do hold at this 111.12 level, we could see some further rotation to the top side. However, again, unless we see a quick break back above that level, focus remains on further downside, with a potential test of the 2019 lows coming next. Okay, so those are the levels I'm looking at then in cable and the euro dollar. Please make sure to stay tuned into the blog over the rest of the day, where we will update you on all important trading developments as they can. And beyond that, I hope you have a relaxing weekend and catch you all next week. Good luck with your trading. Thanks for joining me today. Goodbye.